crowdfunding and co-investments. Experienced angel investors like yourself and angel groups have a key leadership role to play in equity crowdfunding. Policymakers have noticed the importance of cooperation between different investor classes involved in early-stage finance as an essential aspect of the funding escalator. This has resulted in programs such as the Seed Enterprise Scheme and the Enterprise Investment Scheme in the UK. Crowdfunding can help to leverage an investment by business angels and enable the business angel to more proactively apply their funds. Many equity crowdfunding platforms are linked with formal or informal business angel networks or individual angels. In some cases, venture capital funds are also involved, as are stock exchanges. Crowdfunding platforms can develop a co-investment approach with one or several business angel networks. There are many ways that these collaborations can be structured. In many cases, an opportunity is selected by an individual business angel or a network. This opportunity may then be invested in by several business angels before being proposed to a partner platform for additional co-investment, usually under different terms. Alternatively, the investment opportunity can be offered to business angels and a crowdfunding platform at the same time, with the same terms. Several business angels associations and networks have been working for years with crowdfunding platforms. Crowdfunding is considered as an introduction to angel investing, although it does not involve the same skill set or process. In terms of transaction values, crowdfunding deals cover a range, from family and friends transactions in the low tens of thousands of euros, to and including angel network deals and early-stage VC, with investments in the low millions of euros per deal. This makes crowdfunding a relevant part of the funding escalator and allows you to use it to co-fund a wide variety of transactions. Let's take a look at the relationships between crowdfunding platforms and business angels. Crowdfunding platforms that are looking to increase their investment activity are open to working with business angels. This can either be through a structured ongoing relationship or on a deal-by-deal basis. Conditions can vary. You should work to identify the platforms that cater to projects in the sectors you are focused on. Some platforms may already have established partnerships with angel networks, and some might reach out to build these relationships. It is important that you look at projects carried by a platform, both successful and unsuccessful. You should also look at other details such as the funding process, fee structures, legal terms, funding amounts, and historic data. This will help to give you an understanding of how the platform is positioned and whether it is suitable for you. Business models vary from one equity crowdfunding platform to another, and these models will impact any co-investments you make. Let's take a look at 3 simplified business models. Firstly, the matchmaking structure. In this model, the online platform connects companies with potential investors. However, all aspects of the negotiation and the transaction are performed offline. The nominee structure. In this case, the online platform represents all investors and invests on their behalf. The platform may hire external lawyers to take care of the paperwork and legal aspects of the transaction. This structure can protect investors against dilution and other potential difficulties. The nominee model has some similarities with the fund structure. However, it has enough differences to benefit from tax incentives, such as those, for example, in the UK's Enterprise Investment Scheme and the Seed Enterprise Investment Scheme. Thirdly, the Syndicate Model. This model is much closer to business angel investing. The platform facilitates the investment around a lead investor. This investor may propose a company to other potential investors. Co-investments by government-led funds are being increasingly evaluated. However, for now, only a few crowdfunding platforms can offer the necessary prudential management. For example, the London Co-Investment Fund is a government-backed fund designed to tackle the chronic funding shortages faced by startup enterprises. Equity crowdfunding platform Crowdcube received £5 million of government money from this fund to allocate to seed stage companies in the technology, digital and science sectors. Today, some equity crowdfunding platforms are raising their own funds to co-invest in projects on their platform. This has opened another way for angels to add a risk-diversified co-investment opportunity to their portfolio.